Hi guys, good morning and welcome to Trading Hour. I'm Pavitra Parekh. With me is Surbhi Upadhyay. We'll also be joined by Rima in just a bit. For the market, once again, very flat day. We are just around 17 points in the green. There is a little bit more pressure being seen in the Nifty bank right now. It has slipped in the past few minutes as well. So that's currently around 25 points in the red. But Surbhi, once again, a very flat day. The good news is that the broader markets are doing a lot better. So you have the advanced decline, which is quite positive. Around 1,900 stocks, which are advancing for 900 in the red.
Oh, yes, absolutely. It is all about mid-caps. I'll just take one or two names before we move on to some of the major headline movers. Look at an Ircon today, RVNL has had this dream run 50% this month. Ircon is not too far behind today. That's a big mover out there. You have names like Central Bank of India reacting to news, Poonawalla, FinCorp. Plenty of action on the upside in today's market. But we will start with the biggies, as we said. And one of the big stocks reacting to numbers is Bajaj Finance. The market likes what it has seen, both on the net interest income growth front, on the growth of the book front. But let's go across to Abhishek to get to the fine print. Abhishek, what's really worked for Bajaj Finance this time?
Well, the inline expectation of a decline in net interest margin of around 30 basis points has really worked because they have delivered on the same. So NI growth is much better than our anticipation, growing at 28% YOY and about 4.5% sequentially. That has helped the operating profit growth as well, which has grown by 29% YOY and about 5.5% sequentially. Provisions have remained elevated a bit, growing by 2.2% quarter on quarter and about 22.5% YOY. However, the lower OPEX has actually helped them beat our estimate on PAT. So PAT has grown by 30.5% YOY and about 6.2% sequentially. So in terms of PNL, both the NI and PAT is a beat to our poll. Asset quality has improved. Gross NPA ratio is down to 0.94% when compared to 1.14% in the previous quarter. Even the net NPA ratio is down by 7 basis points. And in the conference, the management has highlighted that for FY24, they will see a net interest margin decline of 40 to 50 basis points. However, the growth guidance has been increased for the AUM growth. So now they believe that the AUM growth in FY24 will be about 28 to 29%. The earlier guidance was about 26 to 27%. So you are seeing a 2% increase in terms of their AUM growth guidance. Back to you.
All right, Abhishek, thanks a lot for running us through all of those numbers. But also tell us, what are analysts making of this? What is the brokerage view? Because, I was looking at the target prices all the way from 5,000 to 9,000, right, on this one?
Well, yes, there are brokerages who are bullish on it and there are brokerages who are bearish on the stock. So to begin with, the commentary from bullish analysts is that they think BAF or Bajaj Finance can actually deliver 25% plus growth in terms of the AUM versus banking system growth, which is between low to mid-teens. And beyond that also, they can see increase in their penetration as well for Bajaj Finance. They say that the company has surprised positively on net interest margin. The net interest margin is in line with what many analysts were working like. Motilal was expecting a 30 basis point decline and it is about 30 to 32 basis point decline as per calculation. On the bearish side, analysts say that the peak performance has been achieved. You can brave for some moderation from current levels. Repeat customer purchase ratio, that is the retention ratio that they are having, is actually on the lower side. So as per my calculation, it's at about 6.7% versus earlier double digits that you had a few years ago. Again, bullish analysts say that the rates likely to have peaked out, which is a tailwind for the company in terms of cost of funds. And ROE profile, the key valuation metric, is at record high and they see levers for ROE improvement going ahead. So we have Morgan Stanley and JP Morgan who remain overweight on the stock. Target price from 8,000 for Morgan Stanley and 9,000 for JP Morgan. Macquarie has an underperformance rating, target price of 5,200, and Goldman Sachs has a sell rating, target price of 6,040 per share. Back to you.
Okay, all right, got that. Thanks very much for all of the details there, Abhishek. In fact, Bajaj Finance and Finserv, both these stocks are the two top Nifty gainers today. Bajaj Finserv, just a reminder, is expected to report its fourth quarter numbers today itself. So we'll hear from the other group company too. Well, we're sticking with financials because that's where the headlines and the newsmakers really are. Life insurance companies, and it's a tale of two cities between SBI Life and HDFC Life. both reported their Q4 numbers. SBI Life has been moving higher. HDFC Life has been under pressure. So why this divergent reaction? Surabhi is joining in to explain the finer points. Surabhi, so what is it that the market likes about SBI Life and what's the concern on HDFC Life?
Thanks for that. So life insurance sector is in focus yet again. HDFC Life and SBI Life both have reported their numbers yesterday, and the numbers aren't too bad for either of them. But it's the FY24 growth outlook which is weighing down HDFC Life. Let's look at some parameters which can give us some perspective on why they are showing divergent trends. Firstly, it is APE, which is annualized premium equivalent. For SBI Life, the growth was 10% on a year-on-year basis, which seems pretty normal. Some would also argue that it was a little muted. For HDFC Life, the growth was 70%, and this growth is largely coming because of pre-booking of high ticket size policies. This has trickled down to their value of new business as well. For SBI Life, it was up 23% on a year-on-year basis, and for HDFC Life, it was up 69%, again due to higher share of non-par products. Now, what's actually moving the stocks is their FY24 growth outlook. SBI Life says that they target an APE and a VNB growth of 20 to 25% and a VNB margin in the range of 29 to 30%. HDFC Life says that they will continue the VNB expansion and aim for a faster than industry FY24 APE growth. But Street is worried exactly about that. They don't think that HDFC Life can grow at a faster rate for FY24, whereas SBI Life has a much cleaner base and the growth seems more realistic. And lastly, what drives the valuation of these life insurance companies is their embedded value. HDFC Life had a growth of 32% in their embedded value on a year-on-year basis. It was impacted by the capital infusion by the promoter and the merger of Exide, which will not be in FY24. SBI Life's embedded value grew at 16% on a year-on-year basis, and it was negatively impacted by the economic variances. Now, the consensus is that the interest rates have peaked, and that will have a positive impact on their embedded value going forward. When you look at their valuations on price by embedded value, on a price by embedded value basis, HDFC Life is trading at 2.5 times FY24 price by embedded value, whereas SBI is trading at 2.1 times FY24 price by embedded value.
All right, Surabhi, thanks a lot for that. So that is the tale of two cities where life insurance companies go. SBI Life, one of the top gainers today, 1.7% in the green. But HDFC Life is the top loser on the Nifty, seeing a cut of 2.5%. With that, we are going to get into a short break now. But on the other side, we will speak to the management of KEC International to discuss their recent order wins as well as their outlook for FY24.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
तेरी रोशनी हूं मैं किस ना
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
Hey, कमाल की कार है ना?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए।
एकदम टॉप का।
जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल XP 100। इंडियन ऑयल, पहले इंडियन फिर ऑयल।
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोर हाई। और सुन 2 लाख के स्टॉक्स या 2000 इन्वेस्ट मर्जी से करो यार, ना लगे कैलकुलेटर ना लगेगा पेन, अल्ट्रा ट्रेडर पैक से होगा ब्रोकर सिर्फ ₹10।
कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। विद 5 पैसा's अल्ट्रा ट्रेडर पैक ब्रोकरेज होगी सिर्फ ₹10 फ्लैट। बीट दैट।
ऐसे करते हैं ट्रेड।
सोच मत छोटे, इंस्टॉल मार।
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Hey, buddy.
Hope you like them.
Introducing Apollo Alpha. Add more thrill to your beast.
Welcome back. You're still tuned into Trading Hour, and let's now get a corporate conversation going. KEC International is the company that we're going to speak with now. The company recently bagged orders worth over 1,000 crore rupees. In fact, earlier this month also they had announced new project wins of around 1,200 crore rupees. We're joined by the company's MD and CEO Vimal Kejriwal now to discuss the new orders, how the order activity is really picking up, and what we can expect for the rest of the financial year. Mr. Kejriwal, thanks a lot for joining us. This is Pavitra. So you've announced an order win of 1,000 crores now. There was earlier 1,200 crores that was announced as well. Can you just take us a little bit through the details of what this order, really is about? What is the kind of revenue that you expect, and what is the order execution timeline like as well?
Good morning, Pavitra. So this order primarily has 3 components. One is the domestic T&D order. Then we have got a couple of orders from civil and some cable orders. So if you look at the timeline, most of these orders are typically between 12 to 18 months. So a large part of the revenues will start accruing between Q2 and Q4. Okay. And with this, our total order book is roughly around 30,000 and odd, and L1 of 3,500-4,000 crores. So we'll be close to 35,000 crores in terms of the overall numbers.
35,000 crores in overall numbers. So give us some sense of margins, because when we spoke to you, I think it was in March, you'd given a sort of projection that the new orders that are coming in should be around the 8 to 10% range. Is that what these new orders actually carry as well, and how do they compare with the blended margins across the order book?
So, Survi, these orders are typically in the same range, 8% to 10%, which is right. And blended order book has a slightly lower margin in terms of when you factor in the current commodity prices, etc. When we have taken the orders, all of them are typically in the same ranges. But when you do a cost to completion, etc., then the range may be slightly lower. But I don't think it's very different now.
Okay, so let me sort of try and get a sense on that, and I know that you can't talk too many numbers because of the silent period. In general, I think as we look at FY24, the market is very excited about order visibility. I mean, your order book is anyway very healthy. We are seeing, the order inflow continue. But can margins become a bit of a spoil sport, a dampener? How do you sort of look ahead to the rest of this year?
So let me put it this way, that all the factors which had impacted the margins in the last 2 years, be it COVID, be it the impact on supply chain due to the war, the logistic cost, and especially the commodity volatility. I think the war is still there, but most of the effects have gone away. The commodity volatility is now a thing of the past. At least now the commodity still moves up and down, but within a very, very narrow range. So that is helping us in ensuring that we bid at a price at which we can, execute the orders. The logistic costs have definitely come down. And our major issue had been our Brazil EPC losses, which we had very clearly said in the earlier calls also that those EPC projects have, been completed. So I do not see any major negative, going forward, in the year H2 and, maybe even Q2, etc.
Okay, just speaking of your Brazil business, because you did mention that, you had earlier mentioned that you will be PBT positive for Brazil in FY24. Do you still maintain that that's possible?
I think so. I think we should be PBT positive, yes.
Okay. Mr. Kejriwal, on a broader sense, give us again an overview of the company's growth this year. Also, a split between the pie. A huge part of your business is now coming in from international operations. Is India the smaller part now? That's point number one. And number two, which are the segments? T&D, you have a small presence in water, for instance. But in terms of just incremental ordering and growth, where do you expect the maximum amount of traction this year?
So, first of all, in water, it's not small for us. It's now almost our order book is more than 4,000 crores. That's one part of it. As far as the split between domestic and international is concerned, right now, internationally, we are only doing T&D. Okay, we have started bidding for railways and civil. So, hopefully, this year we should see some successes on both the railways and civil. So, the split between order book would be 30% international and 70% civil. But this 30% is entirely transmission. Okay, so that's the way it is. As far as the growth is concerned, I think clearly the growth in transmission has surprised us. I don't think we had expected transmission to grow so much as grown last year. And also when we look at the tender pipeline, especially both in India and Middle East, I'll say Saudi Arabia generally, and a part of it in the United States. I think there are three geographies where we are seeing a lot of growth which is coming up. And the second piece for us has been civil. Civil has been doing very well for us. Our current order book is more than 10,000 crores. And we do expect civil to grow by at least 50% even in FY24. The business which is not growing very much, I think, is the railways, which is a bit of a disappointment because we had thought that railways would grow continuously. But I think with the emphasis of government more on the rolling stock and Vande Bharat trains, etc., we are seeing a little bit less expenditure on the infra build, which I think will come because the trains will need tracks to run. I think it's a matter of time that the infra build will happen.
Okay. Got that, Mr. Kejriwal. Good talking to you as always. We hope to have a longer conversation perhaps next time, maybe after your earnings, but gives us a good overview of how the business is shaping up, how KEC International is looking at this year. Thank you. We'll take a quick break on that note. On the other side, we will come back with some technical ideas. We'll have an analyst joining in, Sudeep Shah of SBI Securities, with a few trading ideas.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
I am heat.
Blue Star Inverter AC with fast cool technology. Bye-bye heat. Blue Star.
The new Fiamma Mint Charcoal Soap. Refreshing fun.
हर इंसान की खुशी की परिभाषा अलग होती है। जैसे कोई अपना स्टार्टअप खोलकर खुश है, तो कोई एक नन्हे मेहमान को घर लाकर लाखों करोड़ लोगों की तरह आप भी मुथूट फाइनेंस से गोल्ड लोन लीजिए और अपनी हर खुशी को पंख दीजिए। मुथूट फाइनेंस गोल्ड लोन, खोलिए खुशियों की तिजोरी। आज ही कॉल कीजिए 1-800-313-1212।
Zedlock Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Can you start banking with Asia's safest bank instantly? Yes, you can.
But can I also find a branch before I finish this?
Yep, on your phone and at 500 plus branches in India.
And what if I need a bank for my business?
We've got you too. For not just small businesses, but for the really big ones too. Live more, bank less. DBS.
Welcome back. So, as promised, let's get a couple of trading ideas going. Sudeep Shah, head of technical and derivative research at SBI Securities, is with us. And as we're going to Sudeep, we're looking at a market with just about a 30-point move on the Nifty. So, Sudeep, thank you for joining in. You tell us any trades on the index, or are you sticking to stocks where all the action really is?
Good morning, Surbhi. See, index due to today's expiry session, I feel it's going to trade range bound. However, the bias will be positive. Any dip to 17,800, 820, I feel should be bought with a 17,770 as a stop loss for a target of 17,910, 17,930. So I feel the bias will be positive. Even Bank Nifty, which was trading negative early morning today, has now come into green and now it's supporting the Nifty. And alongside IT index is also moving today. So I feel all in all, it will be positive. However, there could be consolidation around. But what action we are seeing is in mid caps and selective stocks like say RITES and JSW Steel. Now the first pick today is RITES. Now with railway stocks in focus, we feel that this stock can do well after IRCON, RVNL all have moved. Now this is now acting as a laggard and now it's catching up. So this stock has broken out of a 6-month consolidation range and has managed to take out its March month swing high of 373. It's trading above it. It's all short and medium term moving averages. And I feel that this stock can be bought with a stop loss of 370 for a target of 420. The second pick would be JSW Steel. Now, what we are seeing is that the dollar index has gradually subsided below 102 levels, and this is a very big positive for all the metal stocks. And Nifty metal index is below its 200 DMA, while the JSW Steel is above its 200 DMA. So, in a sense, this is a sheer outperformance by this stock against its own index. And stock has broken out of its consolidation range between 710 and 725. So I feel this stock can be bought with a 715 stop loss for a target of 760, 770 on the upside.
All right, so Dev, thanks a lot for joining us with that quick take and check on the market. But with that, we are going to get into a short break now. When we come back, it is all about mid-cap IT. Today, we will throw some light on the earnings and management commentary on the other side.
अरे अभी तक मटेरियल आया नहीं? पैसे नहीं है, मटेरियल कैसे आएगा? अच्छा
पैसे का आप भी टेंशन मत लो। यू ग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything! Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
चले?
चले?
साफ हवा एंजॉय करने के लिए अब कहीं और क्यों चले? वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद हेपा फिल्टर लाए साफ ठंडी हवा सीधे आपके घर, वो भी 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Welcome back. You're still tuned into Trading Hour. Like we were telling you, it is a lot about the mid-cap IT earnings which have come through now. L&T Tech is surging over 7% right now. Rima, clearly the street is happy with the numbers.
You know, I heard your tease. Coming up next is mid-cap IT. So right on cue,
You came marching into the studio.
So welcome. Marching into the studio. But let's talk about L&T Tech, right? What a phenomenal up move on the stock. Well, what the street likes is basically the guidance. So the revenue growth was strong for next year. The company said 20% plus in terms of a top line growth. Of that, 10% will be organic growth, but the key has been the margins. Look at the way margins for the company have improved over the last couple of quarters. And the street was worried that margins for L&T Tech will decline next year because they made an acquisition which had low margins. Supposedly margins were in the tune of 8 to 10%. So the street was very worried that margins are going to start contracting for the company. But basically what the management had to say is that even once SWC gets integrated, the impact on the margins is not going to be as bad as what the street was fearing. They're quite confident that margins will be held on. The 17% band will be held on to the margins, and the street was expecting a worse performance on the margin. That explains the stock price up move. It's not just the strong revenue growth, but it's also the fact that the margin weakness next year due to the acquired company is not going to be as bad as what the initial forecast was. Listen into what the management had to say about the margins.
Amortization, etc., all the expenses put together, we've guided in the 17% range is where we will be for the year and the quarter as we move forward. And we have an aspiration to get back to the 18% levels in the first half of FY26. So that's as far as the margins are concerned. If you remember, when we came back, when we did the acquisition, we'd actually guided 180 to 200 bips lower. But we've slightly been able to improve that when we came in with the 17% range back in terms of the EBIT guidance.
Okay, the next one is KPIT Tech. And here as well, the company is guiding for margins of 19 to 20%. This suggests that FY24 is going to be another year of margin improvement because in FY23, the company ended with margins of 18.9%. And this is the margin trajectory for the company. 13.7% in FY20. Progressively, they've been improving their margins. And it's not that the management is happy now with the current margins. After improving margins in FY24, listen into what they've set their sights on in terms of long-term margins. Listen into what the KPIT management had to tell us earlier about the margin picture going forward for next year and the year after.
The quality of work continues to go up, and we believe that will help us to increase our margins a little bit more. And this year will be between 19 and 20%. We believe that in the next year or two, we'll continue to have profitable growth. The point is to go beyond 20% next year and the year after. It will be similar to the growth, that we are likely to see in the new year as well. I don't want to say flat in the sense 36%, let's say, out of that. The growth was, again, the organic growth was in the range of 27 to 30% last year. And this year, we are also calling out 27 to 30%.
Okay, that was KPIT Tech and L&T Tech, both doing well in trade today. But Rima, your job's not done. My God, it's another heavy day. Tech Mahindra.
But I think by the end of this week, I should be done.
Then you can rejoice.
I think I can say that, I think so.
Okay, before we get to the end, there is the middle. So let's talk about some of the biggies that are reporting today.
I would like to call it the tail end, not middle.
Okay, the tail end then. Yes, tail end. That sounds
Whatever
better.
makes you happy, Rima. It's been a tough few days.
It's been a very tough few long, arduous days. But let me run you through Wipro, right? The key to track will be the next year's guidance. Because what we've seen right now is that large caps have disappointed in terms of their guidance. You had Infi talking about a 4 to 7% kind of growth. HCL Tech was also 8 to 10%. But mid caps are doing very well. So what does Wipro have to say about guidance? The Q1 FY24 guidance is going to be very, very crucial. Consensus expectation is not very inspiring. It's minus 0.1 to plus 1. And the second thing to watch from Wipro will be margins. Margins for Wipro got hit very, very hard. Currently, margins are close to 16%. But the aspiration is margins, at least in the near term, should get back to 17% plus. What's the guide path? Those are the two key numbers to track forward-looking from Wipro. The other one will be Tech Mahindra, which typically comes out with numbers at about 3:45 p.m., so immediately post-market hours. Here, Q3 was a tough quarter for Tech Mahindra because many of their top clients have been hit very hard. They did indicate that there are headwinds in their top clients, so which is why growth this time is going to be fairly muted for Tech Mahindra, and the outlook of these top clients is going to be very crucial. Secondly, The deal wins for the company have been very strong for the last 5 quarters, but now CLSA and JM Financial are saying the deal wins are going to start moderating for the company, so the trajectory on deal wins will be crucial. In terms of mid-caps, let me quickly run you through LTIMindtree. Now, LTIMindtree in Q3 had one big miss, and that was the margin performance. Their margins in Q3 declined by 360 basis points on a quarter-on-quarter basis. To put it in context, the margins were at 17.5% in Q2. It came down to 13.9%. So what's the trajectory on margin improvement is something that the street is going to be tracked. The reason why margins came down so aggressively were because of M&A related integration costs, but they need to get back to that 17-18% band. And finally, for Emphasis, it's going to be a tough quarter because, as we've been highlighting, BFSI contributes more than 60% to their overall revenues. So in BFSI, the company has exposure to mortgage, and the mortgage business has been hit due to higher interest rates. That's why this could be the second consecutive quarter where revenues from Emphasis decline on a quarter-on-quarter basis. So this quarter may be tough, maybe a negative quarter, a quarter of contraction. But what about the way forward, FY24? If the management can give any clarity about the recovery in the performance, the street will be tracking it very closely. So second consecutive quarter of revenue decline is what the street is anticipating from Emphasis due to their very high exposure to the banking space. Wraps it up.
Okay, all right. Thanks very much for that neat wrap. Rima, we'll take a break on that note. On the other side, we'll discuss the market with, of course, a special spotlight on the IT sector. Amit Khurana of Dolat Capital Market joining in.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Co-powered by IBM.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Welcome back. You're with us on Trading Hour. And as promised, let's straight away get to that conversation with Dolat Capital. We have Amit Khurana joining us on this leg of the show. Amit, good to have you on. Thanks for joining in. Have to start with what else but IT, right? Rima in the previous segment was recapping really well what seems to be working for so many of the mid-cap players. Whether it is KPIT Tech, L&T earlier, we had a couple of other high flyers when the season started off. Mastech, for instance, did so well. What is your view on IT overall, and what stocks, if at all, do you own in the portfolio? Are you looking at the big boys, or have you been going with the mid caps?
Well, thanks very much for inviting me, Surbi. Pleasure to be here. So IT, I think the bigger part of the narrative over the last 2 quarters, 2-3 odd quarters, has been essentially a visibility on FY24 and what the impact of a slowdown will sort of percolate to. So our view has been neutral from an official perspective, but I must highlight that while neutral sounds like more like an indecisive stand to make, but we've been slightly more on the negative side of the entire sector stance. Led by 2 critical factors. One, the visibility of the earnings, which we saw the biggies clearly marking sort of a bearish, sort of a negative outlook, so to say, where the street was much higher at high single digits while we were closer to mid single digits. And it is now even lower than that. Specific to your point, the mid-caps reporting strong numbers. I think I must say that it is a bit of a surprise to us also. But when we look at in terms of it being captured in the valuations, I think they are pretty richly valued. Most of the mid caps today quote at high 20s, early 30s kind of multiples, which we believe even growths of 17-18% are fairly well discounted. As we go along FY24, our big risk that we see to these earnings is on 2 counts. One, the likely sharp slowdown that we may eventually see on spending and the US, which is the largest geography. How will that percolate? And second bigger part is how will the market, re-rate these stocks from here onwards, which we see a very, shall I say, a very big challenge to that environment. So while the positives are there, how will money be made incrementally from here onward is something that we feel is going to be a big challenge. And hence our neutral stance that the mid caps are richly valued. They are already discounting this positivity, while the large caps, cutting down their directionally at least sounding not as bullish, only corroborates our view that we will be maintaining our neutral stance.
Amit, morning. So we know IT, particularly the large cap names like Infi, disappointed on the way down. But in the earnings season so far, have there been any outliers, either on the positive side or on the negative side, X of some of these large cap IT names? Because most appear to be in line with estimates. So wanted to get your sense where EPS estimates have changed or where there has been a big shift in the way we should approach a stock, given the strategic announcements. Go ahead.
Well, till now, there has not been a very specific, shall I say, and a very material shift that we have seen in our coverage universe. But, while you were talking to your team members earlier, today is a big day. So you have a lot of earnings getting reported. So the coverage universe will probably be in a better shape to take a directional view after we get to see those numbers and the commentary from the managements. But all said and done, so I think largely if you're capturing plus minus 2%, 3% movements really doesn't make a difference. To me, the big picture is this. Do the large caps get to a high single digit or a low double digit growth? And that has a tail impact on the mid caps as well. But if that is not the case, then I think these minor variations will not make a much of a difference to at least our view on, that we have on the sector and individual players. For example, L&T Technology Services, we've upgraded our estimates by very, very minor numbers here or there, but it still remains a sell from our perspective as a stock. And similarly, we've had concerns on some of the other similar names where we feel that the valuations being captured, unless you have a very, very big shift, which we haven't seen till now.
Okay, got that. Hi, Amit. Thanks for joining us. What is your take on the banks? Now, we have got some of the big earnings out already. We have more from the likes of Axis, which I expected today. Is this a space that you continue to like? And do you think that this is a safer space within the current market setup?
Well, exactly. That's been our view for the last two quarters. In spite of the concern that the NIMs will top out eventually in Q4 or Q1. But the way the guidance from the managements, large banks, some of the managements have guided pretty strong NIM performance, and they've guided for even better times ahead. Only corroborates and gives us even more confidence that banks largely as a sector will be the ones to look out for over the next 12 to 18 months still. And given their weightage, which is pretty good from the Nifty perspective and their overall exposure to the economy cycle, I think they're probably in the best shape that I've seen in years now. So therefore, our overweight continues to be in banks and a mix of large cap banks, essentially. Axis specifically, we have currently a view that the operating level performance will be the key to watch, and the management guidance as to how they will look at the integration issues around the acquisition. I think those are the factors which we have a concern about, and we will look out for management guidance on that.
Okay. Amit, mid-caps. I mean, that market is just moving to its own beat and rhythm, right? Every day there's a new theme. Sometimes it's these shoe stocks, these railway guys, RVNL, today it's Ircon. They just shoot through the roof, and many a times these are not just price actions. They're accompanied by huge volumes as well. What do you make of the overall trend? I mean, my question is, how convinced are you about the kind of mid-cap action that we're seeing? And also give us some ideas. I mean, if you look at beyond Nifty 50 or Nifty 100, any interesting stocks that make it to your portfolios or recommendations?
Well, yes. So we've been of the view that starting last year, November, December, when we drew out the CY24 scenario, we called out that the markets, at least for the first half of calendar year, will be more bottoms up. And we reiterated that view in our February strategy note. I think that continues to be the preferred way of looking at it. And I know part of the reason is that mid-caps have taken a significant brunt on their earnings, which hopefully should be turning better from here onwards as the rate cycle peaks out, the demand environment bottoms out, and you see a much better trajectory on overall scheme of things. This does not take away the fact that the EPS numbers in some of the subsectors or some of the names may be still at risk. But largely, I think more or less the sentiment captures that, and hence the sort of interest levels that we're looking at these valuations. From our perspective, we've liked quite a few names. In fact, on some of the domestic consumption names, we are far more bullish than what we were, let's say, 12 months back. And therefore, our play is that over the next 12 to 18 months, you will see a significant uptake in consumption levels. And that should also get further sort of corroborated by the lower raw material cost and interest costs. Specifically on sectors or names, so we like the hotels as a space for quite some time. We believe that the cycle is extending into FY24 pretty strongly, and we like Chalet there. On Alcobev, we continue to have a preference for Radico as a name, which we believe is a play on the premiumization move in the entire Alcobev as a space. We continue to like real estate, which we believe is in a structural uptrend, and eventually, as the rates top out, the mortgage rates topping out, will be a trigger for these stocks to start performing much, much better over the next 12 to 18 months. So we've been pretty constructive on mid caps and small caps in particular, and especially domestic consumption related stories in particular.
All right, and a lot of these pockets have been doing very well, like you mentioned, the real estate pack, the hotels. So lots of small opportunities available, even if the market looks pretty range bound on the top. Amit, thanks a lot for joining us today with that quick take on the market. For now, it is time for another short break on the show, but there's lots more market action lined up for you in just a bit, so stay with us.
अभी तक मटेरियल आया नहीं, पैसे नहीं है। अच्छा,
यूप्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
AC gone.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye-bye heat. Blue Star.
Shining a spotlight on the visionaries who are laying the foundation to achieve parity in the workforce.
We want to be a firm which has an affirmative bias towards our women executive.
Whichever competitive examination you look at it, the women are doing much better than men.
We have something called the Deloitte 30 Club, where 33% of our leadership is all women.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC.
Co-presented by HCL Tech.
Knowledge partner Deloitte. Industry partner Vicky. Associate partner Reliance Industries Limited.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Welcome back. April series expiry and the markets are moving. We're at the high point of the day. The Nifty is approaching 17,860, very close to the recent high. In the April series, the high that the Nifty had made was 17,863, and from there, the markets had turned. And once again, we are approaching. Mid-caps are faring well. The mid-cap index is outperforming, and this week so far, the frontline indices are up 1.3%, while the mid-cap index is up nearly 1%. Big day in terms of earnings. So keep it with CNBC TV 18. We're going to wrap up on Trading Hour. Thank you for watching.